What's the best way to deal with an emergency? Simple. You prepare for it. That's easy to do if you know what to expect. For example, if it's been raining outside, you know that you have to carry an umbrella. That's not an emergency though. I'm talking about a major health event or a car accident. I'm talking about getting insurance. You're watching MoneyWise on NDTV Profit, and I'm Mathew. And on today's episode, I'd like to talk to you about two types of insurance that you absolutely need. One you don't have a choice about, and with the second, you shouldn't give yourself a choice. Motor and health insurance. What do you need to know about both of those policies before you go out and get protection? To tell you about that, I have with me Amit Chhabra, who's the Chief Business Officer of Policy Bazaar. Thanks so much, Amit, for joining me.
Hi, Alex. It's a pleasure being here.
So both very important topics to talk about, and I think over the course of several years, we've tried to sensitize our viewers about the importance of having them. But on today's program, I'd like to talk about mistakes that people might be making or things that they can do to get the best deal, because these products are now very, very easily available. In fact, very accessible as well. So let's start with motor insurance, and let's talk about affordability first, and then we'll break it down so that everyone understands. Do you think that there's an issue with affordability right now?
Not for everybody, but there might be with a lot of people as well. So why does it happen? See, Indian car market today, car insurance market, it prices the car, doesn't price the driver.
Okay.
Now that's a problem, because let's say you and I have the same car, and you are a great driver and I am a terrible driver. The chances of me claiming are going to be high. Chances of you claiming are going to be low.
Okay.
But look at the sad state of affairs in a way that you and I pay the same premium.
Right.
Somewhere it's unfair on you, and it's just not fair, right?
But so okay, so then that's the case across the board. It has been the case across the board. Is there a solution to that?
Yeah. So actually, over the last many years, insurance industry has really innovated on products, and now there are solutions. So thankfully now, I have to pay less premium and you have to pay more premium, and that's fair. How does that happen? It looks at something as simple as how many kilometers do I drive in a year. So let's say if I drive 5,000 kilometers in a year and you drive, let's say 15,000 kilometers in a year, I pay less premium. I pay roughly 1/3 of the premium compared to you.
Yeah. Because
the chances of accidents are like that.
In this scenario, I'm the worst driver. I'm asking. All right. So, but what you're saying is essentially you pay as you drive. Is that how it works?
Yes. So two things happen. When you buy a policy, you are able to define that I plan to drive 5,000 kilometers in the year. So let's say this is my second car or my weekend car, which doesn't drive as much. So I will only pay for 5,000 kilometers. It's like a prepaid recharge. So I buy the insurance policy. I declare that I plan to drive 5,000 kilometers. Now two things can happen. One is you drive for less than 5,000 kilometers and all is well and you've saved a lot of money.
Right.
The second thing is maybe you had a change of plans. You started to take this car more out. And now what happens is that you've driven, let's say, 5,000 kilometers within the first 3 months itself. Now what you can do is you can recharge. So it's like a top up. You can top up your, the way you top up your phone, you top up your car insurance as well. It also in a way allows you to almost break down your insurance premium into EMIs or small installments.
Okay.
So let's say if I drive 15,000 kilometers, but I don't want to pay a hefty premium upfront, I can actually buy the kilometers now, buy 5,000 kilometers now, and then buy another 5,000 kilometers after a few days, and then buy more after a few days. So it also allows me to manage. I think in this day and age of, the way we pay for Netflix or, or YouTube or a lot of the other things on EMIs or SIPs in a way, this is like that. It gives you the flexibility of paying, and also for people who drive less, they pay less. For people who drive more, they pay more.
Okay. There's also something that I've noticed when I've been in the market to buy insurance for the car, is that there is a huge range when you are in the market, right? You can have a difference that goes into the thousands of rupees. Why is that? Because ultimately you're talking about, even in this scenario, you're talking about one car, it's the same car. Even if they're pricing the car and not the driver, there shouldn't be such a big difference, right?
Yes and no. What you're saying, theoretically, yes. But see, the way insurance is priced, they are predicting the number of accidents that will happen, the number of claims that might come. Now, every company prices based on their past history with a car of that kind. Now, let's say I am a company, let's say I'm a 50-year-old company in India. I probably have a lot more data, but you know, my experience suggests that, let's say, a Toyota Fortuner is a terrible car from an insurance parlance because it's driven a lot on highways. There might be another insurance company which is a relatively new entrant, which does not have that much exposure. They might not have enough data as well, right? So they might not think of a Toyota Fortuner as bad a car as, you know, what the other company might think of.
So you're saying the reputation of the car matters?
Not reputation
or the usage of the car by the people that have driven it before you bought it?
On an average.
Okay.
So for example, like I'll give you an example. Let's talk about a Toyota Innova.
Right.
It's typically a car which is driven long distances. You know, people use it to travel on highways, etc. Right? But you may also have a Toyota Innova because, you know, you're a chauffeur-driven guy and, you know, you want to just go to your office in a comfortable car, which is only, let's say, 5 kilometers away. Now, the problem is a Toyota Innova typically, on an average, is driven on the highways, which means that the claims are more, chances of claims are more. Hence, the premiums may be higher. But at the same time, as I said, right, there may be a 50-year-old company and there may be a 2-year-old company. They may look at the Toyota Innova slightly differently. It may also to do with the life cycle of an insurance company as well. So let's say if I am an insurance company which is very aggressive right now and I want to onboard as many customers as possible, I may give an aggressive premium or a lesser premium.
It is a business after all.
It's a business after all. You know, companies have to make a certain profit. Whereas if I am a company, you know, which is like, I want to do only profitable business and I'm really conscious about my profits, I may even say that I don't need Innovas at all in my portfolio. So it depends on a lot of these factors, which is why different companies will show different premiums all the time.
Okay. The other thing that I wanted to ask you about is, and I saw this in an advertisement, which is why it came up, is that now there are insurance companies that are actively telling people, hey, you don't need to take that insurance policy when you are at the showroom because they charge you a lot more. It's funny that a lot of people don't know about this.
Yes, because see, insurance, if you just look at the history of how insurance, and not just car insurance, in general insurance has been sold, is some guy has come to your house, given you some pamphlet, taken a check from you, and that's all. That's all you know about your insurance policy also, unfortunately. I'm not kidding, I'm from the insurance industry, but 10 years back when I bought my first health insurance policy, I was not in the insurance industry and I bought it exactly like that. Some guy came and told me that this is the best policy, you should just take it. I gave him a check and that's all. Unfortunately, that's how insurance has been, you know, sold in the past.
Right.
Which basically means that people don't even know which policy they have, right? And that's not the right thing because, see, the good news is there's been a lot of innovation that has happened over the years now. You know, you have such modular plans that you can choose exactly what coverages you want. For that to happen, it's important that you compare. So that behavior is now changing and increasingly, you know, we are seeing that people compare before they buy their motor insurance or any insurance policy.
But by and large, would you say that most insurance policies that are sold at the showroom when you buy a new vehicle are much costlier than what you would get outside?
On an average, they are. You know,
and what's the delta?
See, delta will vary from company to company, but average you would see, you know, anywhere between 20 to 30%. They are expensive. See, you have to also understand now, I'll make a controversial statement, but insurance, any seller of insurance earns basically based on the premium that they sell. So if I sell you an expensive policy, I earn more as a seller of insurance. So of course, you know, so it's a bit of a conflict in a way, but as a seller, I would always want to sell the more expensive policy.
Yeah.
Wherever a customer has options is when the price drops. So let's say if I show you 20 plans on my website today, you will see the most expensive and the most cheapest option, right? But if I only give you one option or two options, then the chances of me giving you an expensive option end up being higher. So for the customer, so that's why the insurance ends up being a bit expensive. In fact, I'll give you my own example. I bought a new car recently. The cost of insurance for my car, from what I saw at the dealer, was 2,50,000 rupees. Versus what I eventually got was a 80,000 rupee insurance policy.
Right.
So the difference can be that stark. Now, what does a consumer do? I think the right answer is a consumer must compare before you buy, right? So if let's say the price differential is minimal, then you can buy from anywhere. But if you're saving as much as, you know, a lakh of rupees, then you must look at why one is cheaper and the other one is expensive and eventually save money.
But does it matter? So suppose the delta, as you pointed out, is as much as 30-40%. In your case, it's significantly more. Is there anything to do with claim settlement that could come into play? The reason I'm asking is that you would obviously decide otherwise purely based on price.
See, motor insurance claims are actually fairly simple. It's a standard policy. So unlike, let's say, health insurance, where there are lots of terms and conditions, every policy is different. In case of car insurance, every policy is exactly the same. There are hardly any differences. You have the same add-ons available everywhere. So as a consumer, when you buy a motor insurance policy, the policy is the same. The only thing that actually changes is the price.
Okay.
Claims are fairly simple, straightforward. Because again, unlike in health insurance, for example, you talk about, do you have a pre-existing condition? Did the hospital do something wrong? Did they place something which they didn't have to place, or did a treatment that wasn't required? Car insurance is fairly seamless.
It's a machine and not a body.
Yeah, exactly.
Let's talk about that price though, because ultimately a lot of people look at motor insurance as one whole, but it's a sum of several parts, right? There is that base policy, and then you build on that. Can you describe that? What can go into an insurance policy, a motor insurance policy?
Sure. So the first cover is the third-party coverage. That's the mandatory coverage that one must take. One has to take, otherwise you get a challan on the road.
Right.
This is a standard priced product across anywhere you buy from. The price is defined by the Motor Vehicle Act. So you cannot really change the price.
Right.
It's a standard price that everybody gets. It's a tariff product.
What does it cover?
So it covers damage to third parties.
Okay.
So let's say, you came in front of my car and I broke your leg. Then the damage that I caused to you will get covered. So let's say you had to go to a hospital. Sorry, it's a bad example maybe.
You've already broken my leg. We're 10 minutes into the conversation, you broke my leg, yeah.
So then whatever was the cost of hospitalization for you or the treatment of your leg, that is covered by the third party policy. Or let's say, in an accident, somebody killed somebody and there's a compensation to be paid. Then that compensation goes from the third party policy.
Okay.
So
Is there a limit?
No. So typically there is not. There is a limited liability third party also, but typically most people don't buy it.
Sure.
There's no limit. It can go into crores as well.
Okay.
So let's say if somebody kills, some very senior person or, some very popular person, it can go into crores as well.
Wow.
It happens. They happen. So that is one part, which is the mandatory part. The second part, which is important, is the own damage part, which essentially means damage to you or your own car.
Yeah.
So let's say if I banged my car into a wall,
Yeah.
and the bumper and the engine got damaged, or the bonnet got damaged, I have to get the car repaired.
Sure.
So I take my car to a garage. Whatever is the cost of getting that repaired, that is covered as the own damage cost. So that's the part which saves your car.
Right.
Now, beyond this is the basic coverage. Beyond this, there are multiple add-ons that you can take to improve the coverage of your car.
A very common one would be zero dep.
That's right. That's the one which most people buy.
Zero depreciation.
Zero
in other words.
depreciation.
Yeah.
It essentially means that so when you're buying a car, let's say after 1 year, certain parts of the car get depreciated over time.
Right.
So like plastic parts will get depreciated by 25%. Tires will get depreciated by, let's say, 10%, and so on and so forth, whatever the exact percentages may be.
Right.
But there's a depreciation. What that means is, so let's say if my car's plastic parts have depreciated by 25%, then when I go to claim, 25% will have to be paid by me and rest is paid by the insurance company because I've used up those 25% parts.
When people say bumper to bumper, what does that mean?
That's zero dep essentially.
Okay.
It basically means that everything from your car, from the front bumper to the back bumper, is protected and you don't have to pay any money.
Okay. Apart from that add-on, what else is available?
I think one which is very relevant is engine protector. And why it's relevant is because, in the last 3-4 months, we saw a lot of floods happening in the country.
Yes.
A lot of floods, and it's not as if you were traveling through a flood. You were sitting in your home, your car was parked in your garage, suddenly water came gushing in and it, filled into your car.
Sure.
Now the problem is, cars today have become complicated. There are a lot of electrical parts, a lot of computers. They get damaged if water goes in. Engine is one part, which costs the most. That's the heart of the car, right? Yeah. Now, if water goes into the engine of the car, it gets damaged. Engine protector add-on ensures that in case there is damage to your engine, non-accidental damage. See, one is you banged your car into a wall and then engine gets damaged. That's covered anyways.
Sure.
But in case of a non-accidental damage to a car, like a flood, for example, that's where engine protector comes in and it covers your engine as well.
Important to have.
Yeah, it's extremely important to have. One important thing I'll mention here is, in case, because it's something that happened to a very close family member recently, in case you're ever caught in a situation like this, please never start your car and try to drive it away.
Okay.
If you're caught in a flood, your car is stalled, or your car was in your garage and water came in, just call the garage and get them to tow away the car, because if you try to drive the car, it leads to more damage, and then that's not covered under insurance because somewhere you should not have done it.
Okay.
Unfortunately, a lot of people don't know it, but it's a very practical thing that everybody must know.
Okay, so 2 aspects we need to cover, then we need to move to health insurance. One is there any way to get the best deal in terms of bringing your premium down, you kind of mentioned your pay per kilometer, right?
Yes.
Or you essentially pay as you drive. But are there any other tricks that you would use to bring down your premium?
Yes. So two tricks. One, we also discussed, you must compare.
Yeah.
So never go for, one plan that's offered to you. Always look at, 10, 15, 20 options and go for the cheapest one.
Sure.
Because it's quite easy to do that.
Yeah.
That's one. The other thing that you can do is, so there's one more innovation that's coming up. And I would recommend it specifically if you don't have a very new car. Let's say your car is 3, 4, 5 years old.
Yeah.
You can also go for a preferred garage plan.
Okay.
What that means is there is a list of garages. You can go to any of those garages, but you can't go outside that list.
Okay.
So typically what happens is the most expensive garages are sort of not in that list. So typically it would mean is that let's say I have a Kia car, just for example. Then maybe the Kia authorized centers will not be there.
Sure.
But all the other multi-brand garages will be there. Now, newer cars in warranty, you would want to take to a Kia authorized workshop. But typically, consumer behavior suggests that once your car is old, people tend to go to other garages also.
I mean, it's much more expensive to go to the company's garage.
It is significantly expensive.
How much is the value?
So it can be as expensive as 30-40%. And simple policies, right? So an OEM garage will always replace a part. They will never repair a part.
That is true.
Now, it's just an example, right? The thing is, as a consumer, I can think that, how does it matter to me? Because insurance company is paying the premium, not the bill, not me. But the thing is, you save on the premium, which eventually is your money. So if you take one of these preferred garage plans, you're basically saying that I promise to go to one of the other garages, and these garages are also good garages, they're authorized.
And how much does your premium come down in that situation?
It can go as low as 20-30%.
Wow, okay. So that's a
significant saving.
Okay. So we've discussed quite a bit. Last bit that I want to discuss on motor insurance is, in what situations can your claims be rejected?
See, motor claims are actually quite simplistic. The only reason a claim can ever be denied or partially denied is if there is a pre-existing damage to your car and that you didn't disclose. So for example, let's say I'm driving my car. There is a big dent on the left side of my car and on the right side of my car. Now that could not have happened in one accident, right?
Unless you're really good at convincing the person.
Yeah, exactly. You have to come up with a really good story, which people do at times. But these things do get caught by insurance companies.
Yeah.
So this is, or let's say there is some large dent and there is a lot of rust on it, right? Which means that it must be like really old. Which means the dent was there even before you bought the policy. So it's stuff like that which typically leads to a bit of claim rejection. But that's typically rare because see, even when you're renewing your policy, if you're renewing in continuity, which means your previous policy had not expired and you bought your next policy, then these things don't matter as well.
Yeah.
So claim rejections don't happen. It's only when, let's say, you decided to save money and didn't renew your policy and then unfortunately you got into an accident, then you have to do all of this. So for a regular customer who's disciplined and buys on time, claims don't get denied.
Okay. We are now moving to the health insurance part of this conversation. And look, we've established over, like I said at the start, several years that you must have a health insurance policy. The question is, how much do you need as a cover? And it's more relevant to ask this question at the start, Amit, today, because we're talking at a time when medical expenses are going up quite significantly on a yearly basis. So the old definitions of, maybe 15 lakhs is enough per person may not be relevant today.
Yeah, absolutely, Alex. In fact, let me start this on a bit of a somber note. This year itself, we have seen more than, I think from what I can remember last, we have seen more than 50 claims which are more than 30 lakh rupees.
Wow.
These were paid to customers, more than 30 lakh rupees. It means there was some serious illness, that had happened. There was one customer of ours whose policies of 20 lakh rupees sum insured. He's claimed more than 1 crore rupees already within a policy year. So I'll tell you how that happened also, because a policy has a concept of restoration. So the sum insured keeps on becoming available.
Sure.
Unfortunately, the person had cancer and, one thing led to the other. Then there was a bit of a liver damage that happened and multiple organ issues happened. Sad state. But the point is, the person is able to go to the best hospital in the country, get the best treatment, which is very tough. Who has 1 crore rupees lying otherwise, right? People have to sell their, investments or houses and all of that, right? And it significantly impacts your future, your family's lifestyle, etc. Right? So I think having health insurance, as you said, is extreme. I don't think there's any option.
Yeah.
of not having health insurance.
Yeah.
That's one. How much health insurance? One should try to maximize as much as possible because large claims have become very real. Why does that happen? One, as you said, hospitals have become really expensive.
Yes.
Treatments have become expensive, and with a lot of modern treatments that are coming in, they've become expensive, right? So, for example, a knee replacement today happens via a robot.
Yes.
It's not a doctor doing it, it's a robot doing it.
Yeah.
So, obviously, it's expensive, but it's better for you also as a consumer because it means that it's more precise. There is no chance that a mistake might happen.
Yes.
So, it's good for the consumer, and you would want to do it.
So, but then the question comes into play about affordability, Amit. So, premium are also going up. The question is how much? I'm actually curious to know about that because I've heard in the industry that premiums for health insurance are going up. But how much are they increasing?
Sure. So, on an average, we are seeing health insurance inflation at anywhere between 10 to 15%, which means that if you paid 100 rupees this year, you will be paying 110 to 115, depending upon which age group you are in, etc., etc. But on an average, that's the hike we are seeing. Some consumers actually see a much larger hike as well. So actually, we see a lot of these cases coming up on social media where a customer is saying that my premium has increased by, let's say, 50%, 60% also. So you have to understand why that happens. That happens because till now you mostly had a policy which was significantly underpriced.
Yes.
Now the correction has happened.
Right.
So, but on an average, which is probably the right number to look at, it's 10 to 15% is where the premium increases every year. That happens because of largely two reasons. One, as we discussed, hospitals have become expensive. Hospitalization costs have become, significantly more. Better treatments are available. That's part one. Second, and that's quite sad, but what's also happening is the chances of a critical illness happening or infectious diseases happening has also gone up significantly. We see a lot of young people having heart problems, cancer.
Respiratory problems in New Delhi now.
Yeah, exactly. It's terrible right now.
Okay, so, but I do want to understand, we didn't put a number to it, and I know that you said maximize it, but then in your opinion, the average individual, what is the kind of cover that they should have?
So I will give you some numbers actually that might help. When I said maximize, what I mean. So the policy for me, so I'm 37-year-old, my wife is also 37-year-old, and I have a 7-year-old daughter.
Yeah.
My health insurance policy of 10 lakh rupees is worth 25,000 rupees. I also have a top-up which takes my 10 lakhs to 1 crore. That top-up is worth 1,300 rupees only.
Okay.
So the next 90 lakhs costs only 1,300 rupees for me.
Wow.
So the overall coverage that I have is 1 crore.
Right.
So when I say maximize, 1 crore is your answer because it's just too cheap to get 1 crore.
So, okay, so therefore you do this with a combination of,
Yes.
and you mentioned super top up. This is essentially a deductible where you have a base policy and you are saying that you will pay a certain amount of money of your own from your pocket or from another policy, and the rest will get paid by the
insurance company, which brings down the price significantly. The reason that 1 crore super top up, where the first 10 lakhs is paid by the other policy, is so cheap is because the chances of a large claim is less, right? It's a law of large numbers.
So, but what's the difference between a top up and a super top up?
So a top up is actually an old concept. It's no longer relevant because nobody really buys a top up now. A top up essentially means there is a per claim deductible.
Sure.
So let's continue with our example. I broke your leg. There was a claim of 2 lakh rupees. The first 1 lakh rupee is the deductible that you paid yourself or you paid through your corporate insurance policy. The next 1 lakh was paid by the insurance company.
Sure.
Now, unfortunately, again during the course of the year, you again come in front of my car.
And you broken my hand.
Broke your other leg or something.
Oh, both my legs are now broken. All right.
So now, in case of a top up, what would have happened is that again the deductible would have applied in this claim again. So let's say this time a claim was bigger. It was a 5 lakh rupee claim because I was coming with more speed this time. The first 1 lakh would have to be paid by you again, and the rest 4 lakhs will be paid by the insurance company in a top up.
But in a super top up?
In a super top up, the entire 5 lakh rupee amount would have been paid by the insurance company.
Okay.
Assuming the two accidents happened in the same year of the policy. So the deductible applies only once in a super top up. A deductible applies at every claim in a top-up, and that's why top-ups are no longer relevant and people buy super top-ups.
I've also heard about, and this is a case that I just heard about, a maternity benefit, which is not, as I understand, sold, by a lot of insurance companies. But here, there was a no-cap policy, and the claim was denied, and there was no clear rationale behind it. First, why is maternity not covered? There aren't any policies. And what do you do in a situation like this?
See, maternity is, so just basic concept, right? Insurance typically relies on the law of large numbers. You know that a lot of people come in, pull in a small amount each. The overall corpus is quite large, and some people claim, and that's how the mathematics stacks up. Maternity is a guaranteed expense to a large extent. Most people who are in the market looking for maternity insurance are the ones who are going to have a child.
Yes.
So the percentage of people who are going to claim is going to be extremely high.
So it's not an unforeseen circumstance.
Exactly. An unforeseen circumstance is, somebody getting cancer.
Sure.
There are lakhs of people, very few tens of people get cancer. So the percentage is very small. That's where insurance comes into the picture.
Yes.
Maternity traditionally, that's why has never been covered in insurance. Coming to one solution, and then I'll answer the other question as well. See, for maternity, one of the recent products that we have built out is a fixed benefit product, which essentially says that if you buy your health insurance policy and also along with that buy a maternity add-on, it's like the zero step add-on. You buy a maternity add-on, so you pay 25,000 rupees. Even if you are already pregnant or expecting, after 3 months itself, whenever you have a child, you get a fixed benefit amount. That amount is 50,000 rupees.
Sure.
That will help you cover some of the costs. Honestly, in a tier 1 city specifically, 50,000 rupees is also not enough.
Right.
But in a lot of smaller cities, that's a good enough amount.
Health insurance, of course, I think deserves a completely separate segment. We've covered some aspects, Amit, but there's clearly lots to talk about. Maybe the next time you're back in Mumbai, we can take this conversation forward. But thank you so much for joining in, for speaking to us on MoneyWise. And that brings us to the end of this particular edition of MoneyWise. As always, write to us and tell us what you think about this episode. And if you've got questions for us, don't forget to write in as well. It's been a pleasure bringing the show to you. Do stay tuned. This is NDTV Profit.